want to welcome everybody to our virtual Bringing You What's Next. Hey, due to COVID, we can't do these things in person, and I want to thank everybody that's joined on. So just so everybody knows, we've got about 250 people on here this afternoon so far. So we really want to thank everybody for showing up. It's been it's been our tradition to do our weekly or our yearly Jeff Sherman week, we're trying to call it. So due to COVID, we can't bring Jeff to Ontario. So we're going to bring you to Jeff, and that's kind of how we're doing it. So I want to thank Jeff for his time today. And that was young Noah Andreasen, who's our intern, who's setting all this up for us. So I want to thank Noah for his efforts here today and getting all of this done. My name is Don Cabas. I'm the general manager of Great Lakes Grain here in Chatham, and we'll talk to you a little bit about the markets, kind of what we're seeing, some of the tools that we're trying to use in our marketplace today to, that kind of help you with everything that you're trying to do on the farm. So that's kind of some of the stuff that we're doing. We are recording this today so that we can replay it or share it with others. So this session is being recorded. You can ask questions. If you move your mouse, you can see it on the bottom of your screen. There's a Q&A that you can ask a question to the group. What we'll try and do with our questions is hopefully they get answered as we get moving along. And if we don't get them answered, we'll ask them at the end. Petra Hathaway is going to be our professional question giver here. So she's going to watch that for us today. So you can text, or you can see those other things as well. Or if you text your local grain originator and you have a question even after the meeting, please do so, or text or email us, and we'll be happy to answer as we move along. Just trying to get my slides to move ahead here. So yeah, as I said earlier, my name is Don Cabas. I'm the general manager of Great Lakes Grain, and we've got a whole team behind us here that is helping us out in our grain business. From a quick agenda standpoint, so the way this is going to work today, you're going to hear a little bit of stuff from myself, and Devin Homick is our grain origination coach in the Delhi area. So Devin has got a few slides to show us. We'll talk a little bit about the Ontario marketplace and kind of what we see and some of the things we're trying to do at Great Lakes Grain. Jeff will come on and talk a little bit about, the world and the US and some of his other things going on in the markets throughout North America. And then we'll have a few questions at the end. And we have a few prizes at the end. Everybody who's registered here today is going to be entered into a draw, and we're going to give away 3 iPads today. We felt that trying to reach you virtually is kind of what we have to do these days. So giving out an iPad will maybe help us get to you a little bit easier in the future. So that's going to be at the end of our presentation. So Jeff is our main speaker today, and he'll be coming on shortly. As you can see, this particular slide, there's a chat and a Q&A button at the bottom of your screen that you can utilize to ask your questions, or you can text 519-521-6077, and that will get you into the question queue as well. So we'd be happy to answer your questions. Hopefully we get a lot of them answered as we move through, but hopefully this works pretty well. So we'll, I wanted to talk a little bit about Great Lakes Grain and who we are and what we do. And Great Lakes Grain is, we are a group of co-ops is what Great Lakes Grain is. Farmers started co-ops a number of years ago where they got together and had buying clubs and all those kind of things to help build their purchasing and marketing strength. And then as co-ops grew, they grew together and formed regional co-ops and some of those other things, and bolted a bunch of these co-ops together. Great Lakes Grain is a partnership of co-ops that are owned by farmers for the benefit of farmers. So ultimately, if you're dealing with Agris, FS Partners, or Embrun Co-op, you're dealing with co-ops who are owned by farmers, and Great Lakes Grain is a co-op or a partnership owned by co-ops. So we're trying to do all of that with you collectively. So just in this past year, this is kind of the bit of the org chart of Great Lakes Grain. Great Lakes Grain is a marketing partnership between Agris, Embrun Co-op, and FS Partners. We added Embrun this past year, and they've become a partner inside of Great Lakes Grain, so they've come through and are now a full partner. If we look at kind of where we are in the province, so in our Great Lakes Grain footprint, we go anywhere from Windsor now all the way up to the Ottawa Valley, and as far north as almost into Barrie, and lots of points in between. This past year, we actually added McEwen Farms up in the Gorey area. That's come in as a satellite arrangement with us. So we're happy to have them come along with us as well. So we're trying to expand our footprint, and by doing a bit of this stuff, is kind of what we're doing here in the next little bit. So we continue to expand our footprint across the province. That's really what I have for you right at this point. I do see a question here right at the moment. Will Great Lakes Grain be accepting the new stacked trait corn, i.e. chrome, in the 21 growing season? So as many of you knew, as we ship a lot of our corn to Europe, and we'll talk a little bit about this a little later on, the European Union is not accepting some of these varieties. And just as of late, Tricepta has been registered has gotten approval for the EU. So at this point, our contracts do read non-approved varieties or not accepted. We're trying to work through with others to see how we can manage and handle those. At this point, we've not been taking them. Now, I'll remind you that this is a growing non-EU approved. You can't test for it, so it's difficult for us to enforce that. So it's really a conversation we will have with others and yourselves, and we'll talk about what are some of those choices that we can make on those varieties. Particularly at our own elevators, we're not accepting them because they're just difficult to keep them separate. So at this point, we can't test for the things. So it's about doing the right thing. Our next speaker is Devin Homick. Devin's our grain origination coach in FS Partners. Devin's been working with us for 11 or 12 years now. And so Devin wants to talk a little bit about some of the things that we've got going on at Great Lakes Grain. So I'll give it back over to Devin. Welcome, Devin.
All right, thank you, Don. I'm Devin Homick, grain origination coach with FS Partners, and I just wanted to go through some of the features that people can use to, access our website, as well as a program that we have that's called Frontier. That's a customer interface that they can go in and check out all of their contracts, settlements, and tickets from that aspect. So the website that we recommend people go to is www.greatlakesgrain.com. That gets you all access to all of the grain information you could utilize. So again, these are the attendee controls. If someone had any questions that they'd like to ask, use the Q&A function at the bottom of the screen, or you could actually text a question to the number 519-521-6077. So this is a look at our website. So if someone wanted to actually access our cash bids and see our values, you can actually, up in the top right-hand corner there is our cash bids. You would select that button. Then what it would do is it would pop you into our cash bids page. You could look at it from there. Now, if a person wanted to, they could actually, if they don't have a login, you could click here, request a login. At that time, you'd be given a password and a username that you could go in. So I'll enter myself with a password. And what I'll do is it'll open up the bids to show all of our direct farm values, as well as our FOB values and our elevator prices. So if you were an interested customer and wanted to, sell grain at whether it's the daytime or in the overnight markets, you would go in and click. This would open this up to this make an offer section that you see highlighted here. You could click on an offer. Today, I'm going to click on the February of 21 bid into Elmer. So it pops up my account. Say I want to do 10,000 bushel at a set price of $7.25. You then would click that submit for confirmation. You can go in and actually sell your own grain online through our website by having this access. Then all you would do with this is kind of your last portion to kind of double check and make sure you did everything right. You would want to check that box to say you acknowledge and have read the terms. You would then create an offer, and it would put an offer in on the system. So multiple things. You could sell the cash price today. You could put an offer in for a price at a higher value for a later date and hope that the market reaches that. So there's some options there that can help you kind of market your own grain. Another program that I talked about before was our Frontier program. So how people could access that is, again, on our Great Lakes Grain website. You go to products and services, go down to the Frontier section. At that time, that would open you up to our Frontier page. Now, if you had a login already, you could just click here to log in and see Frontier. Or if you were a new customer wanting to access it, you would just go through the required fields below. It's going to ask you information about your account. And then from there, you could go in and see the Frontier page, which would look like this. From Frontier here, you can access all of your contracts, all of your tickets, as well as your settlements. One other nice option on here on Frontier is you can access your contracts. And from there, you can actually confirm your contracts by selecting this, open them up, and then you would confirm your contract right there on the website. So it does give you some neat features with our website, as well as the Frontier interface. So if any customers have any questions on that, I recommend that you contact any of the local branches. You can contact myself, and I can help you with that to get on and access those cash bids or the Frontier program. We'll go back to Don Cabas here.
As you can see in what Devin was showing on Frontier, it's really interesting. You can confirm your contracts. You can actually see my contracts here right at the moment. There's a question here. Can you preset a location so when you log out the cash bids, return to the same location all the time? That is a bit of a on our website, when you're on it, it always comes back to Arner or Air at the start of it. So there is a bit of an issue when you see that. So just as you look at that, you'll have to scroll through your location. One last piece is make sure you sign up for EFT, electric funds transfer. We do all of our checks out of Chatham. They sometimes putting it in the mail from Chatham to Ottawa Valley is quite a little hike sometimes. So you can sign up for EFT. Our banking system is built on electronic banking, and it works pretty well. So for those of you that aren't signed up, please do so. It's a good thing to do. I wouldn't mind talking just a couple of minutes on just our local market here a little bit. In Ontario, we had a large crop of corn, 176 bushel per acre, according to Agricor, on about 2.2 million acres. We've had an extensive export program, out of all the ports that really started in the spring of 2020. Ethanol demand was kind of a little softer due to COVID and the amount of people driving, et cetera. And we've actually seen, because of our export program, pretty high basis levels right through through now since last summer, and it feels like that's continuing this year. We've got this silly inverted futures market, which is really saying, hey, we want that crop today. It's making that summer 21 marketings a little bit more difficult, not only for yourselves, but for us selling to, end users, et cetera. Most industrial plants today have pretty good coverage until the spring, and they're looking at that inverse as well and saying, how do I get myself covered? Are we going to have enough? Are we going to have enough corn to get us through to a new crop? Is probably the bigger question, as we've had good rallies in this market, and the farmer has sold this market. So that's kind of where we see local corn demand here happening. Jeff will bring us up to speed on kind of what that futures market kind of looks like. We take a look at soybeans real quick. We had a big yielding 2020 soybean crop at a 52 bushel per acre average. Acres were a little bit down because we had higher wheat and corn acres versus the previous year, but we had a pretty big bean crop and a big export program. North American exports, not only Canadian, but North American exports have been strong. We've had a big sucking sound from China and others, and that's been pulling lots of beans out of the North American market. It's certainly been front loaded, meaning, as an elevator, putting grain away and hoping basis rallies throughout the year has not been the case. So a lot of this product has gone directly out. Spring exports may surface again. Right today, we're sitting on whatever the crushers are looking for. Our two crushers in the province are as what they're looking for. So not that there's a whole lot of beans left in the countryside. The market has done its job and has kind of sucked those out of here. New crop basis values remain very strong from a U.S. perspective. However, our higher Canadian dollar has been hurting our local basis, as our, if we take a look at that Canadian dollar from last March, when COVID started, we were down to about a 68-cent dollar, and today we're, north of 78 cents. So we've got this 21 acreage battle really starting here now. Ontario wheat, we've got a big wheat acreage in the ground for 21 crop that's larger than 20. So we're pretty bullish on the acreage. It went in good shape, and I think most of that wheat, and it's been, a good chunk of it's already on the books and contracted at a good value. There's virtually no carry in the wheat market, which is really quite something different from a number of years ago, where other years we've had $1 a bushel carry in the wheat market in one marketing year. That has not been the case. Wheat market has tightened up, and people are paying for the wheat today. Good values. We are on a relatively high basis level when we consider U.S. basis values, considering the acres are planted. And export markets are certainly strong, and will export a good amount of wheat, I think, at harvest this coming year, and that's kind of how it's shaping up from a basis perspective. A couple things I want you to think about as you're listening to Jeff. We really work on what is your plan, what is that strategy as we move forward. We are in this pre-planting season from January to March, and so what are we doing from now on? What's been your historic selling pattern? What's your cost of production? What are the seasonals been doing? How do we start getting that marketing plan in place between now and planting season? And I really want you to think about that through Jeff's presentation. We have our, get my slide to move ahead. We also have our, the planting season from April to June. I kind of break out marketing into 4 segments: pre-planting, planting, growing, and harvesting. And I think what you want to think about today is, how do we build in our pre-planting season of our marketing plan? How much do I want to have sold in that pre-planting season? How much do I want to have sold in that April to June, my July to September timeframe? How do I want to look at my last few bushels of old crop, my lottery bushels, and what do I think about my wheat marketing. And then I'm into my harvest season of October to December. So I really want you to think about that first period, that planning season, which we're in right now, and how do we plan to get this grain marketed between now and next fall, and when you need the cash and all of those things, and how do we deal with the remainder of old crop. That's really all I have right at this point. We'll flip it over to Jeff. Jeff, we actually have a couple of polls here. So first question, do you have a grain marketing plan in place? Hopefully you see that and you can click on it. And then second, how concerned are you about your grain marketing for the upcoming year? So a little bit of interaction here, and feel free to click on the polls. So after we're done polling, we will have Jeff come on and give his highlights. I think a lot of you know Jeff is no stranger to this group. Jeff's been coming here for a cool dozen years here to Ontario. We certainly miss having all of our breakfast, dinner, and lunch meetings with all of you. And we couldn't send you a virtual roast beef sandwich here over the computer, even though we wanted to get that done. But anyway, Jeff Sherman has been coming here for 10 or 12 years. He's done a great job. Jeff does our brokerage in Des Moines, Iowa. Jeff has been in the grain business, all his career. And Jeff is certainly no stranger. Interesting on our polls here, what some of those answers are. One other thing we'd like to know, because we are not seeing everybody in front of us, we're a little curious to know what our age demographic is here of the people that are here. A lot of you are taking time out of your day, joining us virtually. I'm just curious what our age is. We won't hold this against you. We're not gender specific here, so we're just kind of curious to see where that is. So great. Thank you for all of your polling. We appreciate your efforts here today.
Thanks, Don, and I want to thank you, the at-home viewer, for taking the time to log into your computer and giving me the opportunity to visit with you about what's going on in commodity markets. I certainly hope this reaches all my Canadian friends healthy and safe. As everybody knows, it's been a crazy past 12 months, and certainly looking forward to the day when we can all travel freely without the fear of becoming sick or making someone else ill. I'll just tell you up front, I've done a couple of these virtual presentations already, and they are not the same as in person. I can still share the information with you, but it's not the same as being able to stand up in front of you, where I have the opportunity to shake your hands and see your smiling faces and interact with you on a personal basis. And I have a lot of friends across Ontario, and I'm disappointed that I'm not going to be able to see them this year. So looking forward to the day when we can come back and visit in the future. Back to questions. If you have a question, they addressed that earlier, but if you're not comfortable typing it in, you can reach out to your GLG originator with your question, and they'll get it to me and we can answer it that way. Or my email address is here, and you can email me your question directly, and I can answer your question that way as well. It was a year ago this week when I was in Ontario. And at that time, we were just starting to hear about some of the first cases of COVID-19 in the United States and Canada. Fast forward 52 weeks, and today there's over 26 million people tested positive for COVID-19. And in my home state of Iowa, there is over 340,000 people who have tested positive for COVID-19. I am one of those 340,000 people. I tested positive for COVID at the end of October. I will tell you that my symptoms were very, very mild. And in fact, if I would drink a 6-pack today, it would cause me more grief than what COVID did. I consider myself very, very fortunate because I know that's not the case for everybody. I tested positive for COVID on a Wednesday, and that following Saturday, I ran a chainsaw all day. Once I recovered from COVID-19, why I donated blood. And here, if you donate blood, they test your blood for antibodies against the virus. And of course, I tested positive for antibodies. So I like to think that I have some protection against the virus should I ever be exposed to it again in the future. There's a huge push here and a big demand for convalescent plasma. And so I am now a convalescent plasma donor. I go every so often and donate plasma. And they tell me that one donation of plasma can help up to 4 COVID patients who are struggling in their recovery. So feeling like I'm doing my small part to try to help others who are struggling on recovering from COVID. Those of you that have heard me speak in the past probably would agree with me that more times than not, I paint maybe not always a bearish picture, but more of a negative picture than a positive picture. And the reality is usually if we get the acres and we get the yield, we simply overproduce. You're not going to hear a negative story from me today, not for old crop, not for new crop. There's a lot of positive things going on in the marketplace. We've got a demand-led bull market. We need lots and lots of acres next year. China's back in here buying large quantities of US grain. And I think the biggest positive of all is we have a COVID-19 vaccine. I do have concerns. And probably my biggest concern that I have is simply, what is the farmer eating this winter since we're not having in-person meetings? I'm a little worried that maybe you're not getting proper nutrition. Normally by this time in the week when I visit Ontario, I've had 4 or 5 roast beef dinners by now, on top of that many breakfasts. US-China trade relations remain tense. We got a huge debt here in the United States. I think we're moving to a period of inflation. Food prices continue to rise around the world. We've got a new administration in Washington, D.C. Does that mean more regulations for agriculture? And of course, we run the risk of not getting COVID under control, and the markets are certainly building on the idea that we do get COVID kind of under control at some point in the near future. U.S. corn ending stocks pegged at 1.55 billion bushels, stocks to use ratio at 10.6%. Both of those are at their lowest level since 2013. Now, the question going forward is, does this stocks number get smaller or bigger as we move through the marketing year? And I think it gets smaller. The USDA has us consuming 5.65 billion bushels of corn for animal feed this year. That's down 177 million versus a year ago. Our first quarter stocks data revealed that our first quarter feed usage was actually up a little bit versus a year ago. Now, I don't have a whole lot of faith in our first quarter stocks data. That picture seems to be getting a little more clearer over the years as we move through the marketing year, but you certainly could take this data and make an argument the USDA might be underestimating the amount of corn we're going to feed this year in the US. Corn usage for ethanol pegged at 4.95 billion bushels, up 98 million versus a year ago. Our weekly grind data would show that we are running slightly below probably the amount needed to meet the USDA target of 4.95 billion bushels. But I want to point out that last year, during the months of April and May, our ethanol grind dropped off dramatically as we shut the economy down. And that's not going to happen this year. So I think we are on pace here to at least hit the USDA's goal on the amount of corn we're going to use for ethanol. And just last week, ADM announced 200 million gallons of ethanol sold to China. Now, our ethanol exports, which is the green line here, has been running below year-ago levels. And I think last week's sale probably brings year-to-date ethanol exports up close to where we were a year ago at this time. Now, the million-dollar question is, does China step in here and buy more U.S. ethanol? If they do, and if you're a believer that they'll buy more ethanol, I can make an argument where the USDA has the amount of corn we're going to use for the production of ethanol understated. The other wild card here is gas demand. Gas demand in the United States has been running anywhere from 12 to 13% below year-ago levels. If you believe we're going to get this COVID vaccine rolled out and people are going to start feeling more comfortable and moving around in the second and third quarters and start driving more, you can make an argument that gas demand is going to increase, therefore potentially creating more demand for ethanol. Right now, I can't make a case why the amount of corn we got projected going into ethanol should decrease, and I certainly can make some scenarios where it could potentially increase going forward. Electric cars, I continue to believe, are the largest threat to the ethanol corn market. I have showed you this slide for the last 2 or 3 years. With the new administration in Washington, D.C., I think that helps accelerate the rate at the electric vehicles hit the marketplace. Last week, GM announced they had set a target by 2035 to sell all electric vehicles. And of course, the Biden administration has announced that they're going to move the federal fleet of vehicles over to electric. Now, don't get me wrong, ethanol is not going to disappear. Ethanol is going to be around for a long, long time. But as this technology continues to advance, electric vehicles are going to continue to capture more and more market share. Record U.S. corn exports pegged at 2.55 billion bushels. Corn exports are estimated to be up 43% versus a year ago. Our year-to-date export sales are actually up 135% versus a year ago. And our inspections, or the amount of corn that has left the country, is up 84% versus a year ago. Our export data just screams the USDA is underestimating the amount of corn we're going to export out of the United States this year. What's going on with corn exports? And it's China. China has got 18 million metric tons that we know of U.S. corn on the books right now. And I think China could take 20 to 22 million metric tons of corn from the United States this year. And that means an additional 250 to 350 million bushels of U.S. corn exports. Right now, the USDA has China importing 17.5 million metric tons of corn from all sources. Certainly look for that number to be increased in next week's February WASDE report. What's going on with China and all the corn buying? And of course, trying to figure out what's going on in China is difficult. But when I look back and I look at this chart, it tells me something's wrong. And this is a chart of US, China, and world corn ending stocks. And I want to draw your attention to the green bars and the red bars. The green bars are world corn ending stocks, and the red bars are China corn ending stocks. And look at the years 2017 and 2018. You can see where China's corn ending stocks from 17 to 18 increased dramatically, as did world corn ending stocks. And I think part of what's going on with China's corn demand is back in 2018, the China National Bureau of Statistics went back, and for the crop years of 2008 to 2018, they adjusted the amount of corn that they had in the country over that time period. And they come up with 290 some million metric tons of additional corn over that time period. The USDA took that data, they adjusted China's demand over that time period, and the net effect was an additional 149 million metric tons of corn added to China's corn ending stocks overnight and to world corn ending stock. I think part of China's corn demand is back in 2018 when this adjustment was made, it was adjusted too high. The other thing going on is, of course, they had African swine fever that just tore through their swine herd. It has recovered now to pre-ASF levels. We had COVID that hit that also reduced demand, and now things have turned the corner over there. And China all of a sudden realizes they don't have as much corn as what they once thought. That is just my opinion on it, a combination of those 3 or 4 things. China's grain or state-owned reserves, the Chinese government does not release how much corn, soybeans, and wheat that they own in their grain reserves. And I'm pretty sure the government knows that. And if they would release that data, it would make things a lot easier to try to figure out what's going on in China. Now, all this corn that's China's bought recently, is that part political for them to make it look like they're wanting to be a little more cordial with the U.S. under the new Biden administration? There's just a lot of unknowns that we don't know about China. Brazilian corn production pegged at 109 million metric tons. Brazil's corn exports projected to be up 4 million metric ton at 39 million metric ton. Want to point something out here with Brazil's corn production. The USDA has their production starting out of the gate at 109 million metric ton. CONAB, which is the equivalent of the USDA in Brazil, has their corn production pegged at 102 million metric tons starting out of the gate. Keep in mind that 75% of Brazil's corn production is produced in their safrinha crop or their second corn crop, which isn't even planted yet. That crop goes in the ground in the month of February. Of course, Brazil's bean harvest is delayed, which is going to delay the seeding of Brazil's second corn crop. Keep an eye on Brazil's soybean harvest pace and the seeding of their safrinha corn crop, because the later that second corn crop gets seeded, that increases the odds that you could have a below trend line yield in Brazil's safrinha corn crop. And a 5% below trend yield in Brazil's corn crop would equate to a 4 million metric tons of production lost, which the world just can't afford at this point. We need a huge Brazilian corn crop. Their safrinha crop, we need a large one. Just if you assume that CONAB's production number out of the gate at 102 is correct, and we have a 5% below trend line yield in the safrinha crop, that would put Brazil's production down below 100 million metric tons. But keep in mind, Brazil's corn crop has not been seeded yet, but it is going in the ground a little later than what it has in the past. Argentina corn production pegged at 47.5 million metric tons. Exports projected to drop 3 million metric ton to 34 million metric ton. Argentina corn crop has struggled a little bit due to some dry conditions due to La Nina. 22% of the crop rated good to excellent versus over 50% good to excellent a year ago. Concerns about food inflation. Argentina is concerned about food inflation. A few weeks ago, the Argentina government come out and banned corn exports out of the country until March 1st. They got some pushback from farmers and exporters. They lifted that ban and then implemented a 30,000 metric ton daily corn export limit. Once again, they got pushback and they lifted all restrictions on corn exports and issued a statement that they would monitor corn exports to ensure domestic supplies remain adequate. The Argentina's government, concerned about food inflation, they want to make sure that they maintain adequate domestic supplies. If for some reason Argentina's crop should drop down to 44, 45 million metric tons, I think we would probably see their government try to step in there and intervene on corn exports. Ukraine's corn situation, production issues in Ukraine, their crop at 29.5 million metric tons, down considerably versus a year ago. Ukraine exports only at 24 million metric ton, down 6 million metric ton from a year ago. Same thing here in Ukraine. They've got concerns about food inflation and want to make sure they maintain ample domestic supplies. The Ukraine government last week capped corn exports at 24 million metric ton. I like to tell the producer that this is one of those rare years where they may hit the trifecta, where we have reduced North American production, reduced Black Sea production, and could potentially have reduced South American production. And if anybody has ever bet a trifecta at the horse track or the dog track and hit it, you were very, very happy when you went to the payout window. World corn ending stocks and stocks to use ratio declining for the 5th year in a row. Once again, I think our world corn ending stocks are overstated. And I think part of that goes back to the 2018 adjustment on China's corn inventories. This is a corn variation chart. This here's the latest USDA WASDE numbers from the January report. The thing that I want to point out here is if the USDA would not have reduced demand in the January report, our corn carryout today would be at 1.3 billion bushels and an 8.8% stocks to use ratio. And I can make a pretty strong argument today that our corn exports could be as large as 2.9 billion bushels, which, if ethanol demand stays the same, would take our carryout down to 1.2. And I can also make an argument there's a chance that our corn usage for ethanol could be increased yet. And that would take our corn ending stocks down to 1 billion bushels. The point I want to make here is I can make lots of arguments today based on the data that we see of why corn ending stocks will be something less than 1.5 billion bushels. I cannot make one argument right now of why that ending stocks number should get any larger than 1.5 billion bushels. Old crop corn, as you guys know, we've had a tremendous rally on corn. I don't think the party's over. I think there's probably, we're going to retest the old highs and probably make new highs at some point. It's a long time until we have a new crop in the ground and we grow a new crop. It's hard for me to get bearish anything right now until I know exactly what the size of the 2021-22 crop is going to be. With that being said, I've always been very, I guess, an advocate of selling some grain based on our seasonal charts. And of course, this year's an exceptional year, and we see a year like this once or twice every 10 years. And it makes one think, well, we just abandon our old theory of marketing grain, some grain based on our seasonal charts. And I'm not willing to do that. I still believe that we should market some grain just based on the seasonal patterns. Keep in mind, managed money is long. The funds are long corn. And should they decide to liquidate some of their links, that certainly could suck some of this premium out of the market in a quick way. And we seen that a couple of weeks ago when corn went down limit. And that was the funds reducing some of their links. Always show you the corn stocks versus price chart. Of course, last several years, we've stayed within this box with our corn stocks, and we're not there today. We're right here. And I think we're heading with our corn stocks down to 1.3 or below. Wouldn't be surprised to see old crop corn run up and test $6 at some point in time. You know, I think corn, just due to the idea that demand is so strong, that corn's going to continue to remain supported. If you go back into time far enough, when we had corn stocks drop below 1 billion bushels, which I don't think is going to happen, that's when we had corn trade up here between $6 and $7. What's acres going to be? Yield? Is weather going to cooperate? Every commodity needs additional acres. The largest projection for corn acres next year that I've seen so far has been a little over 94 million. Bean acres at 90 to 90.5. And we need that many acres. And if we would get 94 corn and 90 beans, that equates to 184.2 million acres. And that would surpass the previous record back in 17 by, I think, 3.8 million acres. And but every commodity needs acres, and pick a commodity, it's profitable. So there's going to be a huge fight between all the different commodities for acres to clear up into springtime. I think we need 11 to 12 million additional acres of all commodities next year. And that means we need to get the 10.2 million acres that went into the prevent plant program last year back into production this spring. So we need good spring weather so we can get these the prevent acres back into production. Can't ignore weather. This is the drought monitor, the latest U.S. drought monitor. And this is the same map a year ago. And you can see that drought conditions has just continued to expand. I seen a weather guy speak 2 weeks ago. He wasn't predicting drought for the Western Corn Belt, but he put up these exact two maps in his presentation and pointed out that it is concerning. And his recommendation was for the Western Corn Belt farmer to get his seeds in the ground early. U.S. corn yield, trend line yield 180.5. If we would get 94 million corn acres next year, and our carryout this year would be 1.3, yeah, we can build our corn inventories next year. But our carryout very well could be down closer to 1 billion bushels, and that keeps corn ending stocks pretty tight next year. And I think 94 million corn acres is a stretch for us for next year, which should be supportive for new crop corn prices. New crop December seasonal charts tell us that D's corn usually tops out in June. I certainly would be recommending making some sales based on our seasonal patterns. Soybean outlook, soybean ending stocks pegged at 140 million bushel carryout. Stocks to use ratio at 3%. Both at their lowest level since 2013. I do want to point out the crop year 2013-14, where we had bean ending stocks at 92 million. We didn't see that number until way late. Prior to getting that number late in the marketing year, we traded, I think the USDA was showing stocks somewhere around 120, 130. What happens to U.S. bean stocks going forward? Does it get bigger or smaller than where it's at today? And I think it gets smaller. USDA is estimating our soybean crush to be up 1.4% versus a year ago at a record 2.2 billion bushels. Bean crush pegged to be up 1.4% on the year. Our year-to-date crush through December is actually up 6.1%. Now, the reality is we need our soybean crush to fall off dramatically in months to come, and it will happen. But we have not seen any signs of demand rationing in soybeans yet today. U.S. bean exports pegged to be up 31% versus a year ago at a record 2.23 billion bushels. Bean exports estimated to be up 31% versus a year ago. Year-to-date bean export sales are up 82% versus a year ago. We have 95% of the USDA's estimated bean exports already on the books. We only need to average about just shade under 4 million bushels of new sales per week from now until the end of August to meet the USDA bean export goal. Our inspections of the amount of beans that we have shipped out of the country are up 80% versus a year ago. Right now, the export data on soybeans argues the USDA is underestimating our bean exports for this year. Bean sales to China, 1.23 billion bushels of beans on the books to China. Current China soybean import pace and U.S. export data certainly I can take that data and make an argument that China's soybean imports could possibly be increased by 2 to 4 million metric tons. Right now, the USDA has China importing a total of 100 million metric tons of soybeans. Just seen a rumor floating around here a little bit ago that China might be canceling some or switching some Brazilian purchases back to the U.S. for February because they don't think they're going to be able to get enough beans out of Brazil in February. World soybean production. We have usage exceeding production for the second year in a row. South American bean production, we got Argentina crop pegged at 48 million metric ton, Brazil soybean crop pegged at 133 million metric ton, and Paraguay is good for 10 million metric tons. The private forecasters I'm seeing out there right now for South American production, I'm not seeing anybody reduce their estimates for South American production right now. Seems like everybody's kind of holding them steady, with a few of them increasing their estimates for South American bean production. Exports coming out of Brazil this year pegged at 85 million metric ton, and Argentina is usually pretty steady around that 7 or 8 million metric ton. Brazil monthly bean exports, something I want to point out here. I just recently, or just a little bit ago, talked about China maybe switching some beans for February, loading out of Brazil back to the U.S. Right now, the ship lineup in Brazil looks like there's about 9 million metric tons lined up to load beans out of Brazil in February. The reality is, I would be surprised if they get 5 million metric tons loaded, and it might be a stretch to even get 4.5 million metric tons. Last year, Brazil loaded out 4.8 million metric tons of soybeans in the month of February. Why is that important? We need as much beans that can come out, get loaded out of Brazil in February as possible, because if that shifts more demand back to the U.S. to bridge that gap until Brazilian beans are available, that's not good for us here in the U.S. We simply don't have the beans. And so we need as many beans that can get shipped out of Brazil in the month of February as possible. And with the soybean harvest being delayed, I think it's going to be a stretch for Brazil to even ship 4.5 million metric tons in the month of February. World soybean demand, record world bean meal oil demand, world soybean ending stocks and stocks to use ratio falling for the second year in a row. And it's just not soybeans that's tight or corn that's tight. Veg oils are tight, any veg oil. This chart here, you can see that our world oilseed ending stocks and stocks to use ratio at the lowest level since 2007 and 2008. Obviously, soybeans, like corn and every other commodities, had a nice run higher. We have backed off some from our highs. Don't think the party's over in soybeans, just with the idea of our carryout being so tight, and the idea that it could even get tighter going forward makes me think at some point in time we're going to rally up to our old highs and potentially make even new ones going forward. Go back into history and you see when we had bean stocks this tight in the past, that's when we've traded beans between 14 and 16 bucks and even took a run up to 17 or 18. And certainly not going to rule out that we can't go back to those levels at some point in time. I'm not going to predict that today, but we have any type of planting issues or weather issues this summer. Things are just tight and we just can't afford to have any reduced North American production for any of the crops, corn, soybeans, or wheat. Keep in mind, manage money, the funds are very long soybeans. Same thing here. Should they start to liquidate some of their length, that certainly could put some pressure on the soybean market. Seasonal charts tell us July soybeans continue to rally on into the summer months. Pigs get fed, hogs get slaughtered. Good time to be in production agriculture. Now I'm excited about where we're at today and where we're going. But sometimes if we get too greedy, we end up getting slaughtered. And these markets are going to remain very, very volatile. And I anticipate we're going to continue to see very large swings in the market, and it's not for the faint of heart. And everybody's risk tolerance is different. My advice to the producer has been make small incremental sales into the rallies to help limit the risk of not getting slaughtered at some point in time. I think that, like I said, I'm friendly. I'm still friendly, but you can't ignore the rallies. Rallies are meant to be sold, and maybe you don't have to make quite as big as sales, but make small incremental sales, and that just to help limit the risk in case the bottom should fall out of this at some point in time. New crop bean outlook, like I said, 90 million bean acres. We need at least that. Trend line yield of 51.2. And if we get 90 million acres next year and our carryout's 140, yeah, we can build our stocks modestly. But if our carryout's closer to 100 million or less, bean stocks stay very, very tight next year either way, which should be supportive for new crop beans. And kind of looks like we've got a range here on new crop with some support at 11 bucks and probably some resistance at 12. I think new crop beans has more work to do. Right now, the price relationship between new crop beans and new crop corn does not scream for the producer to alter his acreage mix. It's certainly not in the high productive states, Illinois, Indiana, and Iowa. Seasonal charts for new crop beans, once again, usually continue to rally on into the summer months. My thoughts about China. Since we got a new regime, I guess, in Washington, D.C., how's this all play out? China did not meet their phase one trade agreement. I have not seen December's data yet, but through November, I think China had just under $22 billion worth of U.S. ag goods purchased. I think they'll end up somewhere around 24, 25 billion this past year. Of course, China is supposed to buy more next year in the phase two trade agreement. You know, if China makes a valiant effort to try to meet their obligation for next year, that just speaks that good times are still ahead for us. But I think today Beijing's in a wait and see mode right now with the new administration. Trade relations with China is one of the bright spots, but it's still tense. And we don't know really yet which direction Biden's going to go with China. I think he is going to hold the line on China. He inherited a large amount of leverage against China, and he'd be crazy to give that up. Both sides of the political aisle here in the United States seem to have a pretty strong appetite for firmer policies against China. And if you go back and look at some of the legislation that had come up for vote under the Trump administration that had to deal with China, that passed with bipartisan support, both from the Democrats and the Republicans. So I think Biden's going to hold the line on China. I don't look for him to go in and do anything with tariffs here right away. I do look for Biden to try to rally our allies and be more of a united front against China, which I think is a great idea. But also you have to remember that, you know, each one of our allies has different goals and objectives. Taiwan, that's a hot button. Keep an eye on the political developments with Taiwan, US, and China. It's an island of democracy that China claims is theirs. They've vowed to unify it with the mainland and have said they'll use force if necessary. This is just a hot button. Be for the former Secretary of State, Mike Pompeo, before he left office, he lifted U.S. government rules prohibiting interactions between the American and Taiwan diplomats. Now, he did that a couple reasons. That was a political move to box in Biden on China a little bit, and it did box in Biden, because Biden's got to figure out how he's going to handle Taiwan. You know, if he goes back and relaxes a little bit on Trump's policy with Taiwan, he's going to appear as being soft on China. And if he holds the line on Taiwan, remains supportive of Taiwan, that's going to make his road with Beijing a little rougher. But I think Biden's going to be supportive of Taiwan. He invited the Taiwan representative to here in the U.S. to his inauguration. And both his Secretary of State and Secretary of Defense both indicated support for Taiwan during their confirmation hearings. But keep an eye on this, because this is going to be a political hot button going forward. U.S. farmer, he has received over $45 billion in aid since 2018 to help offset retaliatory tariffs and COVID. We have printed so much money in the United States and thrown it at the U.S. producer. We've come up with so many different programs, I can't even hardly keep track of them all. But the reality of it is this aid has helped the U.S. farmers' net income increase 43% in 2020 versus 2019. 39% of the U.S. farmers' net income last year came in the form of government payments. This just simply cannot continue, and I don't think it will continue under the Biden administration. And the U.S. producer today would tell you that they don't need it with where commodity prices are at today. And the one thing Trump did do, he took care of the U.S. producer. When he went after China, he took care of the U.S. farmer. Right, wrong, or indifferent. And if any of you ever traveled across the Midwest during the election, you've seen Trump flags and signs everywhere across the Midwest. And of course, that's a big part of the reason why. When I originally put this presentation together, I thought the US dollar would probably stay under some pressure as our debt rises and more stimulus is probably coming. And I've kind of changed my position on this just a little bit over the last few days when I was looking at the US dollar chart. And we've had a pretty good rally from the lows, and we've come back and I think yesterday closed higher than the December highs. And I'm wondering that maybe the US dollar is getting a little support here on ideas that the U.S. might be the first country to come out of this COVID situation. And although our economy is starting to teetering a little bit, maybe it's not as bad as the economies in other places throughout the world. So I'm not kind of changing my position just a little bit on maybe the U.S. dollar doesn't stay under pressure like I had originally thought. Federal debt, our federal debt is $27.5 trillion, heading to $30 trillion. Our federal debt as the percent of our GDP is a record 127%, higher than any other time in U.S. history. How does all this play out? At some point in time, we got to have inflation. And I think we are heading for a period of inflation. And if you are a believer that history repeats itself, this chart just screams that we're heading for a period of inflation. And if we come out of this COVID pandemic here relatively soon, I think it could hit us like a brick wall. The Feds seem to be more concerned about deflation than inflation right now. But if we come out of this pandemic in a fairly quick manner, there's going to be some goods and services that you're probably just not going to be able to get. just simply because the supply chain isn't ramped up to meet the huge demand. U.S. unemployment rate, 6.7%. I think we've done a pretty good job of recovering the unemployment rate. What's going on there? I think we've done a pretty good job of recovering in our employment here from the COVID shutdown, but we still have a ways to go from the low that we had of 3.5% prior to the COVID pandemic. There's a new sheriff in town, and in my opinion, the first thing he did on day one was give my Canadian friends the finger when he whacked the Keystone Pipeline. I'm a proponent of the Keystone Pipeline. My truck uses hydrocarbons. It doesn't run on fairy tale dust or unicorn pee. I thought the Keystone Pipeline was a good thing for both countries, and certainly disappointed that Biden canceled it, did it on day one without even talking to our Canadian friends about it. Knew he was going to do it because he said he was going to do it when he campaigned. But I'm very disappointed to see him doing that. And I'm equally disappointed in your leader, Trudeau's response. I thought Trudeau's response of that he was disappointed was pretty weak. I would have preferred to seen JT be a little more aggressive in his response and maybe ruffle Biden's feathers up a little bit. But obviously Biden's seen as a lot greener than Trump. It appears that COVID and climate and domestic issues are taking priority over any trade issues, and he's going to get us back in the Paris Climate Agreement and rejoining the World Health Organization. Democrats have full control of government. They maintain their seats they maintain the House, and the Senate is split 50-50 between the Republicans and the Democrats. And of course, Vice President Harris then has the deciding vote in the Senate. This makes the people to the extreme right and the conservatives very, very nervous that Democrats have full control. I like to point out that it requires 60 members of the Senate to end the debate on a topic and move it to a vote. So whatever the Democrats come up with, they're going to need to get at least 10 Republicans on board to advance their agenda. Also like to point out that the Democrat senator out of West Virginia and the senator out of Colorado are likely to be against any major climate reforms, or at least try to water down the legislation. The Democrat senator out of Colorado was actually, I think, a fossil fuels geologist early on in his career. Vilsack returns as a U.S. Ag Secretary. He was the Ag Secretary under the Biden administration for 8 years. This was a safe pick for Biden. He knows the landscape. I view him as status quo. He's got strong ties to Iowa. He was the Iowa governor for a while, and the Midwest. And I think that's a good thing. And I'm okay with Vilsack being the U.S. Ag Secretary. He does have a connection to Big Ag, and some people think that that's a fault. And this Ag Secretary gig must be a pretty good gig, because he gave up an $833,000 a year job as the CEO of the U.S. Dairy Export Council. Now, the progressives out there want to see the USDA Ag's budget be channeled more towards climate change and addressing racial inequalities in our food system. But if you look at the news headlines that's been coming out, and if you haven't already figured it out, you know, we're talking about cooperate on climate mitigation. And those are the new buzzwords under the Biden administration. Will we see a carbon capture program in the 2023 Farm Bill? I'm guessing we will. I'm guessing that the Biden administration will come up with some type of program where the farmer can seed grass and they get paid to try to capture carbon, and we're going to save the world. Duck Dynasty took over the Capitol here a few weeks ago. If you weren't paying attention, what a mess. Don't have a whole lot to say about this other than it was extremely embarrassing for the United States. When I first seen this picture up here on the right, I thought it was the US-Mexican border wall, but no, it turned out to be the Capitol. The takeaway from all this disastrous mess was democracy prevailed, and that is the important thing. Although President Biden or Trump didn't attend President Biden's inauguration, which is not the first time an outgoing president didn't attend the incoming president's inauguration, Trump did leave Biden a note at the White House. And it's my understanding President Trump moved to Florida, where he's now homeless, and he is panhandling for a Twitter account. Moving on to wheat here, and I'm just about done. We'll get to some questions and stuff here, but U.S. wheat ending stocks down at the lowest level since 2014. World wheat demand just continues to grow. World wheat imports up an amazing 76 million metric ton since 2017. And we do have world wheat ending stocks up slightly versus a year ago, but keep in mind, wheat is one of those crops that's grown almost everywhere throughout the world and is being harvested almost each month somewhere throughout the world. One thing I want to point out about wheat exports, food inflation. Russia's concerned about it, and they have implemented export tariffs on wheat. And depending on how this all plays out and floats out throughout the summer, it certainly could push some more exports back to North America here. But Russia is also concerned about food inflation and want to make sure they maintain ample domestic stock. Winter wheat areas seeded, our acres are up 1.58 million versus a year ago. I'm anticipating all wheat acres only to be up about 1.1 to 1.2 million versus a year ago. I think we'll lose some spring wheat acres across the Dakotas and Minnesota as there's an incentive to expand corn and soybean acres. Trendline yield 49.1 bushels per acre, and we're going to pull our wheat ending stocks lower next year. We're going to pull them down, and I can make a case where our wheat ending stocks next year could drop down to 700 million bushel carryout, which is going to be supportive for wheat. The wheat market's going to be sensitive to any northern hemisphere weather. We just don't have any room for any loss in wheat yield next year. And any weather problem could certainly send U.S. wheat prices skyrocketing higher. And Russian government intervention and exports coming out of their country and weather next year in the Black Sea, all going to play into this. Seasonal charts on wheat tells us that wheat usually tops out here in February on July wheat. Dees wheat tops out in Feb, sells off, gives us another opportunity back out here in March. And once again, I'm perfectly fine, even though a lot of things scream that maybe we shouldn't, but I'm okay with just selling a small amount based on our seasonal patterns. So with that being said, I want to thank you for the opportunity and for logging in and giving me the chance to visit with you. I would much rather have been there in person where I could interact with you on a personal level, and it's just a lot more fun. In fact, I'm a lot more comfortable standing up in front of people giving my presentation than I am sitting at my computer staring at a screen. But with that, let's have some questions if anybody's got any questions.
Jeff, thanks for the presentation. So we have a few questions here. Can you hear me, Jeff, okay?
I can hear you.
Wonderful. So I had to transcribe these from people's notes, so bear with me as I try to decipher some of the questions. Are the World Trade Organization appointments likely by the Biden administration?
Can you repeat that to me again?
Yep. Are the World Trade Organization appointments likely to be made by the Biden administration?
I'm probably going to have to do some research on that question. The World Trade Organization appointments likely be appointed by the Biden administration. Is there a pass button where we go?
Yep, that's fine, Jeff. We'll
I don't
move
know
on.
that I have
And,
an answer to that one without doing some research on it.
and if the customer that wrote that question, if there's any specifications, I can look at that before we move on from Jeff here. The next question, Jeff, will China buy wheat to replace high-priced corn?
They could buy some U.S. wheat, yes.
Okay. Thank you. I think you answered this one already, but maybe we'll just confirm. Will the U.S. farmer get payments from the government in 2021?
Maybe. Before Trump left office, he did authorize some additional money to go to the U.S. farmer. And the Biden administration has put a hold on that. And basically the Biden administration, I think, has put a hold on it because they want to review it. But the livestock farmer was supposed to get some additional money. I think the U.S. farmer is supposed to get another $20 an acre in that last round of aid. Now, whether that happens going forward is yet to be determined, but my guess is they'll probably go ahead and release it. But Biden did slow that down. It's not going to be anything like what they had seen the last 2 years.
Awesome. Thanks, Jeff. I'm going to keep going here if you're okay. What are the short and long-term effects of electronic vehicles on the ethanol industrial market?
Well, the long-term effect on electric vehicles is, in my opinion, ethanol has had its heyday. Its heyday has come and gone. And as electric vehicles continue to grab more and more market share, where we're going to continue to use less and less fossil fuels over time. So that's certainly, in my opinion, fast forward 30 years from now, and we're using less ethanol.
Awesome. Thanks, Jeff. I have a question here that says, one of the ways producers can make marketing decisions is to look at futures market charts. How would a producer use the futures market chart called cash?
I had to do some research on that question. That was sent to me earlier in the day, and that's
okay.
It's one to kind of, I think what that gentleman is referring to is a corn price index contract that was originated or trades on the Minneapolis Grain Exchange. And what that index or that cash futures price he is referring to is that's a price index of an accumulation of different cash points throughout the Midwest. And I think that there is very, very little volume in that contract, which tells me you stay away from it.
Perfect. Thanks, Jeff. And as we're going through these, if anyone wants any follow-up, of course, Jeff, for your grain origination specialist, will be able to help you. We're going to keep going here, Jeff, if you're okay. We have lots of questions rolling in.
I'm all right.
Jeff, what are your CBOT corn, bean, and wheat new crop sales target prices for 2021 and 2022?
Well, they're trying to pin me down on that, right?
Yep, of course.
Yeah. Like I said, and I don't know that you're going to get a specific price out of me today, because like I said, these markets are going to be very, very volatile, clear up through summer and clear up until we know when we've actually got a 2021-22 crop. And that's why I say continue to make small sales and small incremental sales into these rallies. Because like I said, I can make a case. I'm not where we have a weather issue this summer. New crop corn and soybeans are just going to skyrocket higher. And I'm not anticipating a weather issue, but the other thing for the Canadian producer is the Canadian dollar, and you guys are seeing some very attractive numbers for new crop. And I've always said the best hedge for a Canadian farmer is to sell the cash.
Agreed. Thanks, Jeff. Any advice on how the farmer can navigate the inverses in the grain markets today?
So the inverses in the grain markets are telling you to sell it today because they're going to pay you less tomorrow. And, you know, the best way to navigate that is sell the cash.
Great, thank you. Just to follow up to that WTO question, the customer wrote back, Trump had left them lapse. So WTO was not functional, was his comment. Back to that original question. Do you think old crop corn spreads will continue to be inverse or come back to be less so?
Stay inverted.
Stay inverted. What percentage of 2021 corn soy would you recommend to have sold now or any at all?
The U.S. producer is less than 5% probably sold on new crop corn and soybeans. I think the Canadian producer is a little more aggressive on his sales for new crop. I'm guessing somewhere around 20-25%. GLG staff can probably help me with that. If you're 20-25% on new crop sold, I think you're in a good spot for right now.
Awesome. Thanks, Jeff. Is there any production issues facing palm oil today?
Yeah, all veg oils are tight. We need more veg oils, all veg oils, palm oil, canola oil, pico oil. It's tight, other than crude oil.
I have some Canadian dollar questions. Maybe I'll leave those for Dawn, Jeff. We have been told over the last several years that pre-contracting is your best chance for good prices. In a year like this, do you think we should be pre-selling the majority of our crop or holding more to sell after harvest? So again, I feel like you've answered that question a couple of times, but any more thoughts on that?
For new crop, I showed the seasonal charts that'll show you that, you know, there's usually seasonals would tell us that we have a little better prices usually in the summertime. And once again, I recommend marketing some of your grain based on those seasonal charts throughout the summer. And depending on weather this summer, if we have any weather concerns, things are going to get wild. And but once we got an idea that we're going to have a 2021-22 crop, we will see some premium sucked out of the market. And the wild card's China. You know, does China continue to stand in there and buy grain next year and all these large commodities they bought this year? Have to assume that they will. I think they probably need to. But, you know, that's a strange country. You know, they answer to no one but themselves.
So just in some follow-up again to these making 2021 sales, when making those sales for 21 crop, hopefully into all these rallies that we're having, do you recommend making a sale for 2022 as well?
Yes, I'm okay with that. I see where, at least today, the stars line up to where things remain tight next year for our ending stocks. And it doesn't look like we go back to a period of overproduction or adding excessively to our inventories until 22-23 crop year.
Thank you, Jeff. I did have one more question here that I wanted to get answers. Is the corn ending stock due to the weather in the American Corn Belt last summer?
Partly that and the derecho,
okay,
which reduced our production. Yep.
Perfect.
And then the huge demand that we've had this year, right?
Right. Thank you. I'll just do one more here, Jeff. Do you see any new government regulations coming into play facing ag hedge funds as a result of the game shop issue happening right now? If so, what regulations could be imposed?
I love that question because that got me thinking out of the box when I seen what happened with GameStop. And then I started wondering, well, could that happen in corn or soybeans? And yes, it could happen.
Right.
There are exchange traded funds out there that are long corn, and one of them is just simply corn, CORN. You can Google it. It's a way for you to be long corn futures without having a brokerage account, and that could happen. The whole GameStop thing's an interesting thing, and I've been very busy lately, and I haven't been able to follow it quite as well as I'd like to, but that's interesting. And the first takeaway from it is that shows you the power of social media, and that could happen in futures someday should they unite and jump in on some of these ETFs that are long corn or soybeans or whatever.
Awesome.
Does it provide regulate, or does it change regulations going forward? I don't see it in commodities at this point in time, but I could see some regulations coming in the equity markets at some point in time going forward.
Wonderful. Well, I've had a couple questions of all parts of your presentation, Jeff. So I think we've given our producers a little bit of insight on, and we're hearing some feedback from them on what they were looking for to get more clarification on. Dawn, I don't know if you can join us back here alongside Jeff. I did have a question. If the US dollar rises, how does the Canadian dollar look? Another question to complement that. Any thoughts on the direction or estimates of the value of the Canadian dollar?
Yeah, so that's kind of two pieces there as the US dollar goes up. Now we're talking about the basket of currencies that make up the US dollar. So as the US dollar climbs, that does hurt the Canadian dollar in the long run. So if the US economy is deemed stronger than the Canadian, that could raise the US dollar and then in turn reduce the Canadian dollar. So what was your second question? I kind of forget it. Petra, want to repeat that?
Just any thoughts on the direction or estimates of the value of the Canadian dollar? Yeah,
and as we look back, the beginning of March, we had a 68-cent dollar. Today, I haven't looked here recently, but 78 cents. And I think it depends on, how much stimulus, how much the rest of the world sees Canada as, how much stimulus they're putting towards the COVID, how quickly we recover out of COVID. I think a lot of those things will hold true. And if they're talking about a 5% growth in the Canadian economy this year versus last year at a negative whatever it was, to me, that probably strengthens the Canadian dollar in a longer term situation.
And maybe this is to both of you. If wheat does not keep up with the price, they might burn it all off and grow corn and beans. Any thoughts, Jeff, from yourself or Don?
Yeah, I think we'll lose some spring wheat acres this spring. Some of that will have to do with weather. But if it looks like moisture levels are going to be pretty decent in the Dakotas and Minnesota, I think guys will plant more corn and soybeans and we'll lose some spring wheat acres. The other thing on wheat too, we've got a cold snap coming up here that not a whole lot of snow cover out there in some of the big winter wheat areas. And, we could have some winter kill possibly here next week. Not seeing anybody talking about that yet, but there's a possibility because there's not a whole lot of snow cover out there.
Certainly in the Ontario marketplace, we've got a lot of wheat on the books. The Ontario farmer has sold a big amount of wheat. And, I think we're at a point where guys may not burn it off because they've got a fair bit sold already. Price looks pretty decent. For that unsold acre, maybe there may be some switching, but we like rotation as well. So I think in Ontario we'll likely keep it. It went in good shape for the most part for the winter wheat. The spring wheat's a different story, I think.
Don, maybe do we have time for one more question?
Yep.
Jeff, your thoughts on the rallying US dollar versus commodity export demand? Will the US dollar continue to rally?
If the US dollar continues to rally, well, that certainly hampers exports to some extent. But right now, the U.S. is the only game in town if you want to buy corn or soybeans, especially corn clear on into the spring months. So regardless of what the dollar does, if a world end user wants to buy corn, they got to come to the U.S. I see a question here, Petra, that has grabbed my attention, and it was from Owen, and that's a good question. And he's asking if USDA statistics info over the years, the composition of people who work in the statistics office, I'm sure has changed. Okay. During the Trump administration, has there been any changes in how the USDA office would operate? And do you think their survey information they publish is getting better or worse over time? That's the part of the question I wanted to answer. So do I think the USDA survey information they publish is getting better or worse over time? I think it's getting worse, and I don't know why, and I'm not so sure they know why. I'm a fan of the USDA. There's no other entity out there that has more feet on the ground and more money thrown at it to try to figure out what our production and demand is than the USDA. But if you go back and look at corn this past year and the yields that the USDA was putting out, clear back in August, I think they still had us like a 181 corn yield in the United States, in the US, and we had a derecho go across Iowa and yada, yada, yada. I don't think anybody believed that number at that time. And the American Farm Bureau Association has been in contact with the USDA and has sent them a letter kind of pushing them on this issue of, is there a way when things change for them to go in and adjust things besides their monthly reports? And so this conversation is being had out there between different entities in the USDA, and we could see some changes going forward with how some of this data is released, or I wouldn't be surprised to see some changes going forward at some point in time.
We do have a few more questions, Jeff. If I could do one more.
You're good. I'm good.
Okay. Does China's massive ag purchases remind you of the great Russian grain robbery of 73, 74 and following inflation?
Yes, absolutely. And whoever asked that question dated theirself, if they remember that. But absolutely. And in fact, this corn purchase the other day was, well, I don't remember the exact details on it, but it was the largest corn purchase, I think, since that time period.
Thank you, Jeff.
We're heading to a period of inflation.
The U.S. drought map keeps growing eastward. What's the long-term spring weather forecast? How far east can or will it get?
I'm not a weather guy, but the weather guy I listened to 2 weeks ago, he spoke at a conference that we held at Midco. He was not predicting drought for the east. He wasn't predicting drought for the west. But once again, he was concerned about dry conditions west of the Mississippi. He thought that there would be some relief for the Western Corn Belt, but he did think things would still remain concerning as we continue to move forward. So, and you know, weather guys are like commodity guys. We're a dime a dozen, but that is a concern, the drought map and the dry conditions in the West.
And I'm not sure if this is maybe we'll close it off with this. And if we didn't answer your question again, please reach out to us or reach out to Jeff and we can definitely get an answer for you. So to Jeff and Don, will high fertilizer prices swing guys to grow a less expensive crop such as soybeans?
No. They'll, commodity prices are high and they'll, I look for the farmer. The U.S. farmer likes to grow corn and he'll stand right in there. There's money. You can run the P&L on corn and soybeans and wheat and there's pretty good margin in it today. And he'll put more inputs on it to get it to yield more because of the prices are good.
Awesome. Thank you, Jeff.
You're welcome.
All right. Well, thanks for everything, Jeff. That was very well done. Looks like we've kept most people's attention for our time.